G'day, Internet. Max right here, and I'm going to have one of the favorites of the channel here, Brett Fogel. Brett, welcome. Thanks so much for being here. Let's get into it. Give us a little bit of a catch up on the whole Bitcoin space, the whole crypto world. What do you got for us?
Yeah, well, it's great to be back as usual, and great to see you out at the Bitcoin conference. The been an interesting couple weeks since then. Of course, we were sitting there watching when former President Trump spoke, and markets rallied right at the same time that Iran launched a missile over into Israel. So there's a lot of things going on, a lot of volatility in the markets. But I'm a big fan of saying, "Show me the charts, I'll tell you the news," and got some interesting stuff to share with you guys today regarding the IBIT. But overall, we've been watching the charts for weeks now, if not months, watching for that break once we had that all-time high, which rejected, and seeing the charts kind of putting in lower highs. Typically, breakouts happen on the third or fifth attempt. So when we started rolling over on that fifth attempt, I knew we were coming back lower. So the big question is, what happens now? And I have a bit of a clue for everybody that we could take a peek at if we want. But overall, it's a waiting game. And of course, our good friend Juan on the channel as well. I had a chat with him the other day on his market cycles, and so he's very interesting stuff. He's suggesting we'll see probably a market cycle low between August 20th and 30th. The exact date will be around August 24th. So that kind of coincides with what I'm seeing too. We see another pullback and retest that lower area around 54K on Bitcoin, maybe a little higher, which would be fine, putting in a higher low, but then kind of pushing up back to retest at 68K and going higher. I have it at 68K on the lower trend line. The actual high, obviously, 70 to 74K ish. But I just think I'm half out of the market right now. We've got battleships heading to the Middle East. We have lots of uncertainty. We don't necessarily have the cycle low timing wise in yet. So I think we've got a couple weeks of chop here. A week or so, maybe going into September. And then we could talk about some of the things that can drive this much higher. And as Arthur Hayes talked about in his most recent article. So where do you want to start?
So yeah, you know what? I think I'll kick it off a little bit because I really every now and again people remind me it's like, hey Max, you have all these great guests, and and we love to hear from you as well. So you know what? I might just kick it off with a little bit of a spiel first, and throw it over to you. So yeah, for all my guys here, I think it's really important that you guys learn to understand the difference between traders and investors. They are very different mindsets, very different strategies, and very different in that way. So I am a very long-term investor. My time horizon is multi years, and I try, but like I typically go on or off, or put money into the market, take money out once every 2 years, once every 3 years, once every like that's the kind of moves I make. So it gets really boring for me to say it and you to listen to it, for me to come on here with my investor strategy and say, guys, we're still in the same zone that we've been in for the last 18 months. It's like it is time to accumulate Bitcoin. That is the long-term investors opinion. This long-term investor's opinion anyway. So from the bottoms, I think late 2022, is that when it was? Something like that. We have been in this accumulation zone, all right? And it also depends on what your mentality is. Do you want to be in and out constantly? I know everybody wants to be, hey, just tell me when to buy and I'll buy at the exact right time and then I'll make lots of money. It's just not how it works. If you go down to those time frames where you're in and out, then you're in the world of trading. And then you have things like stop losses and downside protection. And it's a game of probability. There's not a trader on the planet that bats 1,000, right? You have losing trades, and you have to have risk mitigation strategies, and you have to have stop losses, and you have to have a strategy when you enter a trade for when you exit a trade. And it's a whole other world. For me, I'm not like that. I'm like, okay, what is my opinion? We're probably heading into a recession here. It's going to be time. There'll probably be a sell-off on risk assets, but the response is going to be printing, lower interest rates. It's going to be an injection of liquidity, and then it's going to take off like a rocket ship. I need to know that broad story, and as best as I can get in at good prices, I'm good. So the long-term investor and strategy is you buy the dips, okay? But then you've also got to pair that with your own portfolio. People think it's as simple as coming on here and saying, okay, I think that the price is low, go buy. Well, that's not true. What's your risk traded? Are you already 100% into crypto and your entire net worth is in crypto and you've got a little bit saved up? No matter how good the price is, no, probably not the time for you to buy. Do you have absolutely zero and it just went on a rally and maybe it's going to the moon tomorrow? Well, maybe you need to buy at high prices. So there's a whole, tapestry here that people need to know. And I try and explain all these things, but the message becomes very, very repetitive because it's actually very, very simple. But what I've learned is people love complexity. People love the news. People love the game, the gambling, the excitement, and all that kinds of stuff. But I am most interested in you just becoming very, very wealthy. And for that, my strategy is this is the accumulation period. If you're comfortable and you have to understand the downside risk, you have to understand the upside risk. Believe it's an asymmetrical trade. I believe long term this is going to go really, really well. I believe long term the system is absolutely broken and corrupt, and over many, many years and decades, people will move away from all of the fiat standards all across the world, and they will move towards Bitcoin as their safe haven. I've thought that since 2012. So far, we're rolling on 12 years where I've been proved absolutely correct in that thesis, even though there are times when the price goes down 90%. So right now, we're in an accumulation period. I believe that once we get over new all-time highs, then you'll start to see me change the tunes. Once we get over 80, 90, $100,000, then you'll start to see me say, okay, depending on your position, depending on where you're at, depending on your risk profile, maybe now it's time to start selling into this price rise, into this rally. That's what you're going to hear a different story from me. Until then, the story is boring, the story is monotonous. Buy the dips, get involved, balance your portfolio so that you're okay. I'll also talk about this a little bit. If you're a younger guy, when I was like early on, I bet the farm on this. It's like, whatever, I'm young, I can recover. I didn't have children, and I was in a position to do that. I was in a very fortunate position. It turned out very, very well for me. Well, I'll tell that story just quickly in case there's some new people here. Yeah, I didn't have any children. I saw an opportunity here. I put a good chunk of money in, had a whole bunch of Bitcoin, very early days in Bitcoin. We didn't have cool thing like ledgers and Trezors. There was no hardware wallets, and it was a show for cowboys. And I put a whole bunch of money in, and it like went up 4x in like 2-3 months. And then what do you know? It all got stolen from me, lost it all. So I was a cowboy, risked everything, was right about the market, and still lost everything. I was still a cowboy. I had another windfall come in from my business over here. I went in again. I had believed in the product, went in again, and thought, okay, now I've learned how to be a little bit more diligent on security, make sure I don't get things stolen anymore. And I went in again, and it's turned out very, very good for me for the following 11, 12, 13 years. So those are the kinds of things that long-term investors think about. And we've got a whole course in Success Council that goes over that, teaches all of that stuff. So refer to those materials. This is why and this is why I have experts like Juan and Brett on and others all the time just to keep me involved with what's going on day to day, because I know that's what you guys love, and I've got to be honest, I love it as well. But I'm not in there doing trading like these guys. So if you're in that world, these are the guys to listen to. Brett, take it away. Tell me what you got. You got something interesting on the IBIT chart. That's what you're telling me?
Yeah, that's was a good sort of overview there too. And sometimes I forget, how granular we do things over here. But yeah, if I could share my screen real quick, I'll kind of guide three people through it. A
So
few things.
so high level, what is IBIT?
Very good. Yeah, so the IBIT, of course, it's the BlackRock ETF that finally got approved and started trading earlier this year. And we were watching that and kind of using that as a surrogate for where Bitcoin price may go in the shorter term. So longer term investors probably don't need to follow that. Just found it interesting. And we'll be watching it on a more macro scale as well, because you may have heard of CME gaps in the charts. And essentially, not to get too technical, but that's because the CME is a Monday to Friday traded instrument. And when price moves over the weekend or after hours, it can open up, creating a price gap. What's interesting is those usually tend to fill and backfill over time. And I'm noticing that same thing on the IBIT, which is the BlackRock ETF. So, but we I can kind of keep it high level if you want. And
So no, I mean I think we have a pretty educated audience, and I think they crave both sides. So go as deep as you want. So the IBIT gaps that you're talking about, yep, that because they don't trade on weekends when all of a sudden markets open, they gap up or gap down.
right.
So and yes, as you correctly say, it's a well-known thing that I've heard many times that over time, for whatever reason, the market gods don't like those gaps, and they come back and fill them out over time. So are you seeing where are the gaps? Are they above us or below us right now?
Well, yeah, I mean, right now they're below us, and so I'm watching the IBIT here. We had just filled a really big one. There was one a couple weeks ago in July to the downside. And of course, last week on Monday, we saw a big drop to both fill that gap and create a new one. But just if you want, I can share a screen. But the magnet, it acts as a magnet. So right now on the IBIT, there's a gap between about $32 and 32.50. So yeah, that's, I think we do pull down. I've got a magnet indicator on the chart here. Basically, that could correspond with 54K Bitcoin again, in that range to sort of retest the drop down, and then give us a cushion or a bounce point to go higher. I use the analogy jumping off the roof onto the trampoline, because without anything to support it down below, generally, market has to build structure and to push higher. And so we're watching that. We're also seeing the DXY kind of dropping too, which, so I think I'm overall bullish, just a little bit more sideways action. The big picture is most of the big traders on Wall Street are down in the Hamptons still sipping their pina coladas out by the pool. The big Wall Street money doesn't usually come back until September, hence the term sell in May and go away. So
Yeah, yeah, no, and I've noticed that year after year, these price rallies happen, in the like late Q1, early Q2, and you're like, oh my God, and it's right on time. It's like it's a really good year. This is when it's supposed to go ballistic, and we all start rubbing our hands, and then all of a sudden, the whole summer is just like, what happened? That was a yawn for like 4 months, and yes, that happens year after year after year. So yeah, I've been kind of expecting that a little bit. Been a sideways choppy thing for a while. And yes, the traders are coming back, but there's so much going on in the world. There's so much volatility. There's so much, there's wars. And just, we were at the Bitcoin conference. It was just days after the Trump assassination attempt. And at the time, Biden was still the other candidate. He had also just failed miserably in his debate. And I believe that the fact that Trump had been so pro-Bitcoin was the first time ever we'd had anyone be pro-Bitcoin, and it was looking like at the time he was a shoo-in, he was going to win the election. I think that was the primary reason for that very nice rally that we had. But since then, I think the Dems have not, they've kind of realized that this is very much a losing battle for them. And although they're not as pro-Bitcoin as Trump, I don't think they are trying to position themselves as Bitcoin's evil. So that's been an interesting turnaround. This is an unbelievably different shift from 4 years ago. So it's very, very good headwinds for Bitcoin long term and politically. But there's some short term issues going on, and if there's ever some big craziness in the markets, all risk assets sell off. That's just going to happen. So where do you think we are? You mentioned that you're a little bit, you're not fully invested at the moment. You are out because you see some negative times ahead. Is that your position?
well, I mean, again, as a swing trader, I like to buy into strength or buy into support. And so if I see uncertainty or that I think will come lower, I'll lighten my positions. And I don't go all in or go all out. Nobody should do that. That's what amateurs do. And so typically, building in positions and legging out of them within reason. Sometimes people will sell half. I caught Solana a couple weeks ago before the drop on Monday. It was that Sunday we thought I knew the markets were going to dump down again, so I on Monday, so I put some buy and limit orders in, have a nice profit on that, and sold some of that yesterday. And in terms of Bitcoin, though, it's just kind of, I have a diagram, kind of a roadmap. I think I've shared it on the channel as well. And so I do think we kind of drift down a little bit farther, retest this base, maybe around 56K, 55K, all the way down into, I see a big buy block in the sort of 54K region, all the way down to 52K possible. But I would imagine 54K region holds, then we get a bounce and start pushing higher. But it really is 50-50. It's been easier to call the last inflection points than this one, just because of all the uncertainty. And so there are just high level, there's two camps, and Arthur Hayes has a great article out this week called Water, Water, Water. And he believes they're going to start printing liquidity and really injecting a lot of liquidity in the markets here, but not just yet, just maybe September, October, going in toward the election, which would make sense. And injecting liquidity, as you know, is really what it's all about. All of these charts and lines and things we do is sort of secondary to quantitative easing and when liquidity cycles begin again. And you're far more of an expert on that than I am. So I don't know, maybe what's your take on that, and when they might start printing in QE here and pushing money back in the economy?
Yeah, so you're absolutely right. I'm a big believer in that. The whether or not they're printing money, because you got to remember, guys, we had that huge inflation shock. Remember, it was transitory, then it wasn't. It's like, oh, it's here to stay. And then the Fed's like, okay, we got to stop it. And I mean, they did not mince their words. They said, we are going to try. They did mince their words. They said a little bit differently. I'm going to tell you what they meant. We are going to try and make you poorer so that you can stop bidding up the price of goods and services. That's what they said. How are we going to try and make you poorer? Well, we're going to raise your interest rates. We're going to make it harder for businesses to borrow money. We're going to make it harder for individuals to borrow money, to buy houses, to spur up their business, to start new businesses. And we're going to let you get poorer so that you can stop bidding up the price of things to get ahead on inflation. Of course, they're not going to do what will actually cure inflation properly, which is stop spending money, but they're going to make you poorer so that you can't spend money instead of getting themselves to stop money. Okay, so that's what they told you they are going to do. What they is inferred, and common sense, and everyone should understand that if they make everyone poorer, they're going to cause a recession and things are going to, or something like that, a slowdown at best, a recession at worst, or depression worse. And that is their goal. Now, what they want to do is manage that a little bit, and they've got their hands on the levers, and they can print money, make you richer, or they can take money away, make you poorer. And interest rates, kind of similar concept. Interest rates up, make you poorer. Interest rates down, you can borrow money, you can feel richer. And they got their hands on the lever. They just told you, I'm going to make you poorer. I'm going to slow down the economy. And what they're gonna try and do is run this ride very well, where they ease on the gas just at the right time. History shows this is a very, very difficult thing to do. Markets are normally markets normally break. You know, the old adage that the bull climbs the stairs and the bear jumps out the window. And so as that bear's in mid-flight falling, they're going to put on the thrusters and start printing. So then the whole world, and it's so sad, this is not how the economy is supposed to work. This is not good. This is not healthy. This is not productive. Instead of watching what companies are doing and is there any new innovation, instead of thinking about investing in this kind of way and in a sensible kind of way, everyone's ignoring all of the facts of the economy, and everyone sits there and watches the Fed and tries to guess what they think the facts in the economy are. History shows they're horrible at doing this. They're wrong all the time. Even though they have access to the most data and the best data, they get it wrong. And so we're sitting here all watching the right thing and the wrong thing. We're watching the Fed, which is what matters. We're not watching the correct thing, which should be. We should be watching the economy, but the Fed have screwed that up. And so we're all sitting here trying to guess when they are going to do that. And the fact of the matter is, you're not going to know for certain because you're not an insider, right? So we're just trying to guess what their motives are and what they're trying to do. I do believe in the deep state. I do believe in the Washington, D.C. cabal that believes that they're our rulers, and they're operating for themselves to make themselves richer and to consolidate power for themselves. Their team, I think they control like 80% of the Republican Party and 100% of the Democrat Party. And right now you've got this character Trump who has kind of hijacked their little baby, the Republican Party, and it's considered an enemy for now. If Trump's eliminated and they manage to put one of their puppets back in the Republican Party, they will not care if it's a Republican or Democrat. They won't care. But as long as it's an outsider in Trump who they don't control, they're going to fight very hard to keep him out. So I don't think they want to see a recession or a turn down or anything like that now. And I think they're going to try and keep the economy glued together until the election. Okay, we'll leave that there. Next comment: when they print, in order to print large sums, huge corrective amounts of liquidity, then they need a justification for it. There needs to be a crisis somewhere that they say, oh, we need to do this to keep the situation glued together. And so they're going to try and keep it glued together so that they don't have to do that until after the election, which bodes for a relatively boring time, in my opinion. The catch is that historically, the whole sell in May and go away rule is, yes, typically summers are very boring. All of the big money is in the Hamptons or doing whatever. And when they come back in September, then it's jobs on. Right. And then very often the Bitcoin price takes off, markets take off, and a lot of things happen. So I'm trying to balance those two competing ideas. We're going to be boring until the election, or the end of this summer goes and things go off. So if you're a long-term trader like me, you're sitting there thinking it's like, oh, boring to the election and then we do whatever, or around September, that's only a couple months difference, right? So we're trying to balance up all of those things. And again, I just find myself in, I know I'm not going to pick the exact bottom. I just need to be in it when it takes off. And so I just find myself quite, heavily invested, let's say, in crypto. But I've also got a nice, healthy, cash flowing business. I've got a lot of cash reserves, and I can, I can live for quite a long time ever without ever selling any crypto. So I have that luxury of having that long term position. So that's my position.
Yeah, that's that sounds about right. And just there's still some perma bulls out there. I mentioned Arthur Hayes. He presents an interesting base case about how we could still go to $1 million Bitcoin once this debt ceiling charade is gone. And but in the near term, I prefer to sort of wait for the signals. And if you can buy it lower and dollar cost average, it's usually a good way to do it, as you said. Buying the dip. And over 72K, 74K is certainly a sign of strength. That's that ceiling. Once we get above there, the reason I like to sort of be semi out is even if I wait and instead of buying now, I'd rather buy over 72K once it confirms and retests, even over 75K. Because if we believe it'll go to 150 this cycle, which I still think is warranted, and I have a case study on TradingView where I show how we get to 100K, 150, even 250K this cycle. I think that's a bit of a stretch here right now, depending on everything that's happening. But as with liquidity, everything goes back into risk on assets. We had this whole Japan yen carry trade and this major firm unwinding that. Essentially, Japan had zero interest bonds on the yen, and they were lending their currency, the yen, at zero interest. So these big trading companies were going out and buying tons of risk on assets at zero interest. And then Japan came out and said, actually, we need to charge you for that. And so created a huge margin issue, and jump trading, which is massive, started unwinding all of its crypto positions. Rumor is they're getting out of crypto entirely. And that put a lot of pressure on the markets. But, back to show me the charts, I'll tell you the news. And I can always do a follow-on video on this for the channel as well to explain it. But, I just go with what I see. I believe that there's far smarter traders than I am out there betting with their wallets, and we can see their footprints. And so my old friend John Najarian used to say, follow the footsteps of elephants. And so that's kind of what we try to do. But either way, we waited out. I think you're right. September, October, political cycle, trying to make the economy look good, boost that for re-election. And, we'll see what happens. Certainly, if Donald Trump gets elected, that would be the better choice for crypto and investors. And, all other things aside, I knew him before he was in the presidency. And a quick aside, I pitched him on a deal 2 weeks before he decided to run for president. And so he, of course, said no. But in the end of the day, that's going to be better for the economy, I think, in business. And it's not a political message here, just saying this new administration has been very clearly anti-crypto. They've coming around saying we're going to be pro, but they're not. They have crypto in their bullseye. And that's a little bit scary, to what would happen with all of this if they were to drop the ball and come back in and somehow, keep Gensler in office. You remember the biggest enthusiastic roar happened when Mr. Trump said that first day one they would fire Gary Gensler, and everybody went bananas. He had to say it again twice. So, again, not a political message, but I mean, we really have these are two opposing headwinds. We have to see how that sorts out, and if we had a few minutes, I could show a couple of visuals on what we were talking about. But you let me know.
I love that. While you're setting that up, why don't you set up those visuals? I will, and listen, yeah, you're being diplomatic and courteous, and this is my channel, so you're being apolitical. I will not do that. I'm absolutely, guys. Like, I think Trump is a big deal. Like, you do not want to let the Dems have another 4 years. That will be much, much worse than the last 4 years, which has been horrible. And so, yeah, absolute full endorsement for Trump for anyone interested in my endorsement. Go for it.
Okay. Yeah. Okay. I wanted to make sure. And with that out in mind, we'll hope that that pans out. That's certainly best for crypto investors. This is the visual where we've been kind of building this case study for weeks now, actually all the way back when we first hit all-time high back in March, and we pushed back up and had a lower high. So you can see I have it labeled Bitcoin breakout attempts. So I've been trading for 25 years and noticed over that time, typically breakouts happen on the third or fifth attempt. And so we had this push up here onto the second one here. This was a little bit lighter push higher, but clearly these lower highs were a cause of concern. And we could also see heavy buying sell orders up in here with one of our indicators that we use. So we could see sort of where the sell pressure was. So when we came up to that fifth attempt, and this was right that day when we hit 70K, was that the Trump pump, I guess you could call it, right in this region after the Bitcoin conference, and then sold off heavily. The shorts, like I always liken it to a tug of war. They need both sides, and each side needs their day in the sun. You can't have the bulls without the bears, and vice versa. So we had lots of shorts here in that 70K region, and so of course we pushed down, pulled that down quite fast. I'll just hide these. Actually, I'll leave that on there. But a lot of lines on here. I know it's hard to read, you guys, but I'll turn this one off. And that one off. These are the two base cases. Push up here, reject at that fifth attempt, and either come down and hold and push higher, which we sort of did, or this red line here, which I'll just move out of the way. It's been following this exactly. I drew this weeks ago, so we're getting a little ahead of ourselves. Another dip down and maybe even down in this region here, 52K, it still wouldn't be a bad thing. These would be great buying opportunities. There are some people out there that say we go down to the 46K region. I don't know. That would take a pretty serious scare, but things are heating up in the Middle East. These are all reasons for, lowering price. And in the end of the day, we really don't know all the moving factors. All we can do is read the tea leaves and be a bit like Sherlock Holmes. So right now I'm watching to see if we will hold this, put in a higher low, and then push back up to this area and see that breakout above that 69.5. Really, I want to see things above this 72K, even 74K to close. And what I mean by close, sort of on a daily closing basis. If we draw this line over, sorry, this has been a bit wonky lately here, to retest. Typically, these are the strongest sort of patterns where we break out and then come back and retest that as support, and then we're off to the races. Over on the trading view, I do studies over here, which you can look at, but really I did one a while back. We've been following this path to 155K Bitcoin down in there, and I think you might find this interesting because these base case scenarios start playing out. It's hard to read here on this replay, but we've been accumulating a list of 10 reasons that could drive us there, and we're starting to see more and more of those happening. Corporate adoption, country adoption, de-dollarization, QE money printing. We're just waiting on that one. The bank term funding program ended, but which we didn't see immediate bank failures, but we starting to quietly hear those. And the question is, how is the Fed going to bail out all these banks without injecting more easing into the economy, which will filter back into risk assets and the liquidity cycle. So, and then having the pulse, having reduced miner selling, supply shock, demand going higher. Political support is number 9. We're starting to see that. Now we have potentially 3 candidates in favor of Bitcoin. And then number 10, the bursting of the global sovereign fiat debt bubble, so all of these I liken to, little smoldering campfires that like a good old California forest fire. If any one of them ignite, they all go up together. So we're really just kind of watching that one step at a time. And here's that chart on the IBIT here showing these magnet areas. So we had a big gap over back in July, and we pushed up, lots of little gaps filled. And then on that big Monday last week, we filled this gap from over here, creating a new one, pushed up to this magnet filled. But the one that hasn't filled is right down in here where I have it, this John. So I think we chop down for the next few weeks. This is a 1-hour chart, by the way. So if I go to 4 hours, a little bit easier to see. And, even the next couple days, chop down into this August 24th area, which is the exact market cycle low date that Juan had mentioned when we had a little class together the other day. So it's going to be really interesting to see what happens there. And that's about all I wanted to look at, other than the DXY pushing down is usually runs inversely to Bitcoin. So it's been in this downward sloping channel, and I have it labeled Bitcoin rally zone. So we have all the factors here for crypto to rally, for Bitcoin to rally, and it's just a matter of time when that starts to take off. But I guess we'll have to wait and see.
Just leave that shot up for a second, just so I understand you correctly. I can see that your black line starts there, like on top of the July mark. That's you drew that before the price was in there. Is that correct?
Yeah, I drew that. I think if you look back on your channel, I wrote that. So yeah, this was back in July. Kind of this was what I said I thought would happen. And sometimes these squiggly lines are somewhat prophetic, but yeah, I kind of nailed that one. Where it goes from here, not so sure, but we'll see.
Well, that always feels good when you draw that and the press is polite enough to go and follow you exactly. That's awesome.
Yeah.
Awesome. Now, why don't you throw the camera back on yourself because you've got a pretty cool event coming up tonight that people should be aware of.
Yeah, thanks for mentioning, and I'll just kind of pull it up here. It is something called Yield Max, and you can learn more about it. This is really interesting. That it's something we've been working on. Our one of our partners is a quant engineer, and his name is Joe, and he's created a lot of our indicators, etc. So I will kill the screen share, but you can learn more about it at moonstream.io/ max yield for you, of course, Max, and anyone watching here, and it'll take you to this page. Essentially, it's a way to create guaranteed income through dividends. And it's not exactly crypto. It's a very interesting product built on the back of a institutional product. And I don't want to give it away too much, but it's tonight, 8 p.m. Eastern, and you can find out more at Moonstream, which is our website, .io/ max yield. And I think you'll find it fascinating. No one else is doing this. And if you're tired of all the volatility, or maybe looking for something to supplement what you're doing, then I think you'd really enjoy seeing this. And so, and Joe is a mad scientist, trader, programmer, quant engineer, and he's definitely got one of those brains that can figure things out. And he's also the creator of all those other signals that we use. So anyway, not to
Oh,
make it a huge commercial, but go ahead.
but yeah, no, so I was going to say, so it's a very educational event, right? You're going to be teaching all about that and going through that
Yeah.
tonight. That's awesome. All right, well, I highly recommend you guys go ahead and do that. Um, can't wait to find out more about that as well because I'm unfamiliar with that. So that's awesome. So yeah, guys, go do in the link in the description below. You can go ahead and click on that link and you can go and secure your spot to do that. Highly recommend it. And we'll close it out now. So guys, give me a like button, hit that subscribe button, do all the things you know you're supposed to do that help channels grow. We really appreciate it. Brett, thank you so much for being here. And guys, we'll see you soon.
Yeah, always a pleasure. Thanks, guys.